All right. Hey there, everybody. Good afternoon, good morning, good evening, depending on where you guys are at. Thanks, Mirza. Appreciate it. Took me a second to find the place. I forgot there was a name change to the simpler free room to the simpler essential room, but I figured it out. So I hope you guys are having a good trading day so far. Hey, high speed. Good to see ya. Let's get started. We'll start, of course, with SPX. Talk about what the market's doing here this morning, and then, of course, if you guys have any questions, please let me know. I will be more than happy to answer it to the best of my ability. And if for some reason it's not something that I am as privy to, like futures, for example, I can certainly point you in the right direction. So starting here with SPX, we have finally gotten a bit stronger of a pullback to the downside. Hey, Tom, good to see you as well. As you can see, we gapped lower this morning, made a third deviation Bollinger Band snap on the hourly chart, basically opened and held the 100 period simple in the hourly chart as resistance. And so far, I've continued to stair step lower. Now, we are finding some signs of exhaustion on the smaller time frame. That makes sense because we're also going into the lunch hour here. So, for those of you who don't know, for time of day, basically during the lunch hour, which is usually around this time of day for the next like hour and maybe 2 hours, right? Basically, the big boys, the hedge funds, usually take their lunch break, right? Because on the East Coast it's 11:30, so everyone's dipping out for lunch. And it usually means, from a market perspective, it's not uncommon that this is the time of day where you'll see things slow down some, where you'll get a little bit of that chop and that consolidation from an intraday pattern. And then we pick back up, usually directionally going into the close of market. Hey, Phil, good to see you. So the fact that we've had this beautiful run to the downside and are starting to see some exhaustion levels, makes sense for things. Certainly, if you were watching your intraday charts, there were a few entries off the 5 minute chart that you could have jumped in on. There was an entry here at around 45, 42 ish. Whenever we consolidated into the 10, it held and everything is still, flaring open to the downside. That could have been an entry. You had another entry here, similar situation. You consolidate it into the 10 period simple around 45.33. And then that caused us to stair step down towards 45.20. And now we're actually on the 5 minute chart starting to break a little bit above the 10 period simple, right? That's where that consolidation is coming in off of momentum. But on the 10 minute chart, we're just now reaching our 10 period simple moving average. So if we do continue to hold this range, if we basically stall, it doesn't mean we can't chop for a bit, but it could be another entry for a leg lower going into the close of today. So watch how these levels can hold. If we start to break above them, then we might get a little bit more of a reversal. I would say up towards 45.40 would be my next target to the upside if we could get a stronger reversal. Otherwise, if we can manage staying anywhere between here and 45.30, then it looks like a better probability that eventually we could continue to roll back down. Now, a part of the reason why I think that's a possibility is because SPX on the weekly chart has been at the top of the axis, right? And so it's been very close to exhaustion for a while, and it could certainly use a pullback. Now, keep in mind, it doesn't necessarily need to be a strong pullback. Whenever we reach exhaustion levels on the weekly chart or on any time frame, really, and this is for bullish exhaustion in this case, there's the possibility of a pullback, which in because it's bullish exhaustion, that would mean a move lower. But there's also the possibility at exhaustion levels, both bullish and bearish, that you just sit in consolidation, right? An overall chop. And consolidation can allow things to reset. And the thing I'm just trying to be mindful of at this point is if we are attempting to go back into a stronger term bullish trend, which is what the monthly chart would suggest, that these pullbacks might be short lived. And a great example of this is back here whenever we had that stronger bounce off the COVID lows and then ran up through 2021, right? Notice how momentum was basically hanging out at the top of the axis the majority of the time. We would have many pullbacks. On those pullbacks, the price basically consolidated, but would still, for the most part, hold support. This was the one I would argue, proper pullback. It actually went down to test the 30 period simple and ATR trailing stop on the weekly. But otherwise, usually that pullback was just right into the 10. And if the 10 held support, you would see, right, maybe a couple weeks later, a grind or a bounce higher to the upside until you reach the next level of exhaustion, consolidated, and then got the next stair step move to the upside. So we could potentially be setting ourselves up for that. Now, in regards to where we're at, though, is there room to get a stronger move to the downside from a weekly perspective into that 10 period simple? Yes, right? The 10 period simple is currently at 44.33. So, a little shy of 100 points move lower is what we could still anticipate for SPX, still be holding weekly support. And then off of that support, maybe find a buying opportunity to jump back in on. From a daily perspective, we are finally starting to break below the 10 period simple, if I remember correctly. Let's pull up the charts to confirm, or at least we're attempting to. Hey, Team Increase, great to see ya. So yeah, we opened below the 10, right? Very similar to the 100 period simple on the hourly chart. We opened below the level, immediately held it as resistance, and we're pulling back. So this is a nice dip to the downside as long as we don't see buyers really come in strongly into the close to prop the price back up. There is a good possibility that we could continue to move lower, or like I said, consolidate. But I would look for the continued move lower down towards the 30 and ATR trailing stop on the daily chart. That would put us right around 44.70 to 44.64 range. That would still be above the weekly 10 period simple, right, to hold us support. But that would be certainly a next good target to the downside. And if that level holds, could create a much better buying opportunity than what we had up here whenever we kept hitting and stalling at 4,600. And for those of you who maybe caught our session earlier today with Joe, if you're in the small account mentorship, or if you're over in the futures or the strike zone mastery here at Simpler, we both kind of talked about that possibility of, potentially needing a bit stronger of a pullback in this market environment if that were to be the case. And potentially, right, the catalyst of that stronger pullback could come about with Apple and Amazon earnings later this week. So Apple and Amazon both report, I believe, Thursday after market close. For this week's expiration, you really only have Friday to be able to trade the reaction, unless you push it out to next week. But as we've seen on a good chunk of these bigger names, not all of them, but things like Netflix, for example, like Tesla, arguably their numbers weren't that bad when they came out, but the market reaction to their earnings announcement was negative, right? And so the question here is, unless won, and here's Netflix, for example, right? We had this beautiful run up into the announcement and then a stronger pullback after the news. And we're kind of now chopping here within this range. Same thing with Tesla. Tesla's also starting to get a pullback. For those of you following along with the Tesla trade idea that I am currently in, this, and I guess I'll pull it up on this chart here, on this bigger one. But for myself, the level that I'm watching right now on whether or not I'm going to cut this bullish trade idea or continue to hold on to it is the 100 period simple on the 4-hour chart. So the daily chart, I'm not liking the looks of it. The Bollinger Bands are starting to open lower. The 10s crossing below the 30. All of that looks weak. But you can see the price itself is still hanging out right at this price support level. And a part of that is because of the 4-hour chart. We're right at a technical support. And what's interesting about the 4-hour chart, at least as of right now, is the Bollinger Bands are coming up to meet the price. Now, that could change if they start to flare open to the downside, right? If we start to break this technical support level here, I will likely cut the trade. And then if it makes sense, we can always look at a re-entry. But this is the level I'm watching. Because if this holds and we bounce, then we're basically holding price support, we're holding the technical support, and we'd basically be cutting our trade at the lows. And I don't want to do that. But at the same time, I do want to be very mindful of the capital risk that we have out there. So if this level does start to break, you can see I have an alert letting me know if we do. then I'll likely look to cut the trade, protect capital, and we can look for a re-entry at that point. But you can see the earnings announcement, right? We had a nice run up into earnings, and then it gapped, and then has been chopping on the lower end of this current range. And so the question is, can Apple and Amazon really have enough juice in their announcement, really beat expectations, or maybe they say something on their guidance that the market really just loves, to where it can bounce back up right off of the news and actually get a beat, kind of like Google did, where all the talk around AI and things like that, the market loved hearing, and it had a strong, um, gap to the upside where it tried to hold up? Or is it going to be more like a Netflix and um, Tesla, where it doesn't do bad on earnings, but the market's already priced it in, or even worse, right? It disappoints on earnings. Maybe it doesn't meet the target, and that causes a bit stronger of a pullback. Certainly, as we look at this going into the news event, everything about this chart is still very much bullish. If earnings wasn't around the corner and the 30 period simple held, this would actually be a buying opportunity. The entire time that we've been in this current bullish trend, pullbacks into the 30 have usually made a good buy opportunity to play for some sort of bounce back up. And arguably, actually, before the last earnings, we had a pullback into the 30 and then had a gap up. So could set up for a similar situation. Um, and that's a possibility. And if that does happen, that's what could help keep the market a little bit more afloat here, right? To where it consolidates to try and let some of that exhaustion reset rather than getting a proper stair step down kind of pullback. And so that's personally what I'm going to be watching a bit more closely, is how does the market react around these earnings? And that might give us a clue, at least in the short term, how we want to prep our accounts, right? Do we want to prep it and maybe even it out between bullish and bearish trade ideas? Or do we want to stay more on the bullish side of things, but give ourselves time, maybe have smaller profit targets to be able to sit through some consolidation for those bigger moves back to the upside when they do occur? And so that's what I'm watching in the market. That's what I'll be very curious to see what happens. Really quick, what did Meta do on earnings? I can't remember. I thought they popped up on earnings. Certainly they're pulling back today. Yeah, so they did pop up on earnings. Not a very strong pop, not as strong as Google looks like. And then we're stalling, of course, and now we're getting a little bit of a pullback. And part of the reason for a lot of these things pulling back is, if you recall, if you've been listening to me for a while now, you know that not just SPX is at, potential weekly exhaustion, but a lot of the big names are also close to their weekly exhaustion levels too. So once again, it's a case of they need a breather, right? Whether that breather is just from consolidation or that breather's from a pullback, it doesn't matter, but they do need to take a little bit of a break, right? You can't run a consistent marathon. Well, I mean, I guess there are some people who have abnormal bodies that can just keep going. But at some point, right, the body's going to give way, and you can't just keep going. You need a break, right? You need some water. You need to reset the muscles, give them a little bit of a rest before you go on that next leg. And the market's a very similar situation where it too needs to take breaks every now and again to allow the technicals to reset. So you can even see here on Meta, right at the top of the axis, we've been, printing on and off some red bars up in this range. So can we get another proper pullback at the very least into the 10? Do we get a stronger pullback? Maybe down into the ATR trailing stop? That's still a little bit up for debate right now. And I do think we'll get some clarity after mainly the Apple and then, of course, the Amazon earnings, because both of those, especially Apple, are bigger components of the market. And so if they start to fall down off their earnings, then we can anticipate the market following through with that, right? If they hold up well on their earnings or they get a bounce higher, then there's a better probability that this pullback today is a short-lived pullback, and we'll be right back into this choppy range maybe by the end of the week. And so if anyone has any questions, any symbols they want to look at, any questions around strategies or indicators, please let me know because now is really the best time to ask it for me to be able to dive into things. Otherwise, I'm more than happy to look for some setups with you guys, maybe do some scans and we can see if there's anything that has an ace setup that we might want to participate in and jump into because that's at least one of the struggles I've been having is on a lot of the scans that I've been doing, I just haven't found anything that looks like a really clean setup, right? And what I don't want to do as a trader is take a mediocre setup and then force my money into that trade idea. Because if you jump in and the trade itself, right, the chart setup doesn't look the best or valid, or, maybe it's a little iffy. Those are usually the chart setups that, don't follow through well. Doesn't mean they can't, but do you really want to put your money at risk out there for those kind of setups and then end up losing it? So I rather look for ace setups to put my money into. And then Keegan, yeah, MDB. Let's add that to our list and we'll pull it up right now. And then Max asking, should we take August off? That's a good question. So we were actually Joe and I were talking about this a little bit earlier. I know Ragi, one of our traders here at Simpler Trading, if you don't catch her charts and coffee that she does each morning before market opens, certainly check it out. I know she streams that over on YouTube as well. Great way to prep for the day. But I caught one of her sessions recently, and she mentioned that for August she's looking to do it a little bit shorter dated. And I think that's the right mindset. And what I mean by that is she's not necessarily looking for the big swing moves to sit and hold on, right? She's looking for the setup. And then if it starts to work in her favor, taking the quick win, right? Being a little bit more mindful of how long she stays in a trade due to the nature of what can sometimes be around August. I wouldn't necessarily say it's a sell in May, go away. And I am personally not a trader that, I would say personally, take kind of those seasonality things, the trader's almanac, if you will, and take it for a grain of salt. Because even though it's happened quite a bit in the past, and it could certainly happen again, it doesn't mean it happens every time. And so, what I would say to do is always go back to your technicals and what they're telling you, right? If your technicals are saying, hey, things might move lower or it might be a bit choppy and you want to sit out, then perfect, right? And if that lines up with August, then it lines up with August again. Um, but otherwise, right, like this year, I would say is a pretty good example of not to go away in May because May, if I remember correctly, was a bit more of a bullish month this year. And so if you had sold in May and go away, you would have missed the start of that bullish run that we've currently been in for the past couple months. So it's a good question, Mac. And so for myself, what I plan to do for August is, like I said, I'm being a little bit more picky on my trade entries. I'm really wanting to find the ace setups. I'd like to get a little bit more clarity after Apple and Amazon earnings this week. Not to say that there aren't more earnings around the board, but we've gotten most of the big names off the table, right? We've gotten Google, Meta, Netflix, Tesla, all those bigger components off. It feels like the last 2 we're really waiting on is Apple and, Amazon to see kind of how those work for the market. And Lynn, absolutely, we can take a look at AMD. Let me write that one. Where'd my pen go? There it is. Let me write that down on the list, and we can look at that right after MDB. So for MDB here, we're definitely in some consolidation. Beautiful gap off the earnings. Well done for anyone who played that. I mean, wow, we closed at 275 and then the next day went up to a high of 297. I mean, wow, over a 100-point move higher. Then of course, with the third deviation Bollinger Band snap, there's always a good probability that you'll either stay within that bars range or you could actually continue higher. In this case, though, I mean, after such a strong move, it makes sense that we kind of stayed within that bars range. We allowed the technicals to catch up with the price. Then we consolidated into the 10. The 10 held. So we tried to work our way a bit higher. But of course, we were also at exhaustion levels. So the exhaustion's been resetting while the chart, for the most part, has been consolidating. We've actually been making a little bit of higher highs here. And sometimes when that happens, where the trend kind of keeps going to the upside and momentum's resetting, the way I look at it is imagine there's a rubber band, right? And usually momentum and the underlying price move in the same direction, right? When it's flat, you're flat here. When it starts to get bullish, the trend starts to go bullish. If we're below the zero line, it turns bearish, the trend starts to turn bearish. But when there's this divergence between the momentum bars resetting and the price ultimately continuing higher, it's like that rubber band is getting stretched out. Right. And as we know as kids, if you continue to stretch out a rubber band, eventually it's going to snap, right? It's going to pop and it's going to, shoot one direction or another. And the same thing can happen here with the price and momentum bars. So typically one of two things happen. Either one, the price resets and it catches up to what the momentum's doing, meaning it props back down and is like, okay, I'm back in line with you, or the momentum bars will start building up again and it will help keep that trend to the upside. But usually, there's a little bit of a pop in one direction or another. So we could be setting up for something like that on MDB. Of course, the question is, do we get the underlying price to pop up and momentum builds up again? Or does the price, get a bit more of a stronger pullback to where it lines back up with how the momentum reset here? And right now, we'll take a look at the weekly chart and see what exhaustion looks like because that might help clue us in. But right now, it's a little hard to tell, and here's why. Overall, the trend is still bullish. We're actually right at the 30 period simple. If this holds, this could actually make a good buying opportunity. It's also at 400 as a psychological level. The last few times that we've tested this range, right, we've bounced up to 425. So it could be another situation where, we're definitely in consolidation currently. But if we hold 400, an opportunity to play back into 425, right? On our lower indicators, they're definitely more in line with consolidation with the momentum pulling back, like we talked about. The compound breakout tool, we've been building energy into a squeeze for a while. That looks good. But the reason why this might actually pop up with the price is because we do have a recent true low. And the last time we had a recent true low was also during a bout of consolidation, right? We had actually several true lows print during this chop. And ultimately, if you had bought in here, now, of course, if you bought in on the earlier signals, unless you were playing for a short term run up into the price resistance level, if you're trying to play the trend move, you definitely either wanted to buy time or maybe just buy shares at that point to avoid theta decay. But you can see ultimately from this range, we definitely trended higher, right? And that's the idea behind the true lows. It's supposed to help give you good discount prices before the next run to the upside. So the fact that we have one printing here back at the end of July is certainly interesting to see, right? Because that could be a clue that if momentum starts to give us a couple of green bars in a row, if we can start to get a more bullish signal in the compound breakout tool, it's kind of something like this, right? Then we could actually be setting up for that bullish trend again, and the price will be the one to pop to the upside. But let's take a look at the weekly chart because I imagine after that earnings announcement, weekly exhaustion could be kind of high here. And then Keegan's asking, is there a more complete version of Thinkorswim online? Let me know what you mean by that. I'm not quite sure what you're asking for there. What I'm currently using is the downloaded desktop version of it. If that's what you're referring to, the platform. So for momentum on MDB, yes, absolutely. We are at exhaustion levels. And we can see the last few times that we've traded at weekly exhaustion, we did have a stronger pullback in the underlying price. So once again, we don't necessarily need a strong pullback. It could just chop, but there's no denying the exhaustion here, especially when this is our fourth week now of a red bar. We might end up making a bearish divergent bar. Now, back to back divergent bars, like we've seen the last 4 weeks, is an overall sign of consolidation, but it doesn't mean it can't follow through on the signal. Technically, all of these so far have followed through. The bullish divergent bar had the higher high, The bearish divergent bar barely, but it did have the lower low the next week. Bullish divergent bar that technically followed through with the higher high this week, once again, barely, but it did. And then, of course, we have the bearish divergent bar. Now, if this bearish divergent bar going into the end of the week starts to break the 10, I might put a little bit more weight on that counter trend signal with the idea that it could start to pull back. That level is at 394. That, of course, means that we'd be breaking below 400. We'd be breaking below the 30 period simple. So, that's a little caution for me to say, let's pile into this to play to the upside. But what I would watch is, like we talked about, right? It doesn't need necessarily a strong pullback to reset. All we could do is chop. So if I were to be playing MDB, what I'd be watching for right now is, do we basically hold in this range? Or does momentum on the daily chart start to cross below the zero line? Do Bollinger Bands start to flare open? Because if that's the case, then I'd look for a bit more of a reversal move. If everything is holding up and it's giving us more the consolidated signal like it is now, then we could just be in a situation like this, right? Where from February basically all the way into May, we consolidated, and then towards the middle of May is when we had the run up into earnings. And MDB is one of those symbols that is no stranger to being stuck in consolidation. So that's what I'd be keeping an eye on right now. uh Certainly, normally I'd like the squeeze and everything else, but once again, if the market's going to anticipate a stronger pullback, that could affect names like MDB, where they too get a stronger pullback to the downside. So personally, there's no trade I would take on this just yet. I'd continue to kind of watch the levels, see how they act. If we can get back down towards like this price level here at 376, 375 ish, and it holds, then I might consider a buying opportunity, especially if everything's holding up well or we're starting to get bullish signs again. Otherwise, though, if it's starting to break, then we know that, okay, maybe we want to trade the reversal move to the downside because of how that weekly exhaustion and price pullbacks have acted in the past, right? Where you do get that stronger move lower before it finds its footing again to play to the upside. Okay, great. Glad Lorna answered the question. For anyone else listening on the other in one of the other rooms here, Lorna answered, the web version of TD Ameritrade is not as functional as the desktop version. It also does not support the simpler trading indicator. So yeah, definitely. And that's like a lot of platforms, in my opinion, brokerage platforms I've come across. If they have a downloadable desktop version, usually that's the one to go with rather than doing one off the web. It's usually the easier way to go about it, certainly. And then Rock, I see you asking about CAT and SEDG. You can take a look at those as well. And of course, absolutely happy to help. Let's go on though to AMD, because that was the next one that you guys asked about here. Ooh, this market just keeps wanting to turn down. For anyone who's in the small account mentorship, if you saw my update from earlier this morning, the morning update I gave, I mentioned the next big support level is 4,500. So if you set up a trade earlier today to play down into that level, I mean, man, it's looking pretty good for you right now. And notice how momentum's reset and starting to show a red bar. Notice that 10 period simple, I mentioned that if we don't really break above that, that could be a re-entry to keep playing this lower. All of that is, starting to line up from an intraday perspective if you're looking for a trade idea there. Back over here to AMD. So AMD had earnings yesterday. We watched through this in the small account mentorship for trade ideas to play off of. And I mentioned personally, this is probably not one I would trade because sometimes it has the gap moves off of earnings, but other times all it will do is consolidate, right? It's like a non-event. And certainly when we take a look at the chart pattern that we had here, we were already going into consolidation into the announcement. And so what happened? Well, we had a slight gap up, right? Basically hit price resistance around 120, and then it dropped right back to the downside. Certainly, if you played more of the iron fly idea, there was probably an opportunity at some point this morning to close that out, have the theta decay work in your favor, and lock in a profit. If you played the volatile move, I can't remember the range that we were looking at for this. The put side might be starting to be a bit more profitable. Um, Certainly with the bearish divergent bar, if this continues to stair step and follow through with the lower low tomorrow, my next target would be the 100 period simple at 104. If we start to break below that, then 100 as the psychological level would be the next target. Bollinger Bands are starting to open some to the downside. You have a bearish signal on the compound breakout tool. So that's a pullback signal telling us we'll test support. If we break support and that remains valid, then it turns more into a bearish trend signal. So overall, though, currently, even with the lows stalling here, notice how the lows are right at price support. So I would argue currently the consolidation's still in play. But once again, if the market's going to continue to show this weakness, don't be surprised if things like AMD follow along with it, especially if Apple and Amazon don't do well on Thursday. And by well, I mean they could do great on the numbers, but like I've mentioned this before, guys. We as traders, right? Not as investors. Keep that in mind. That's different. Investing in shares, holding it long term, that's different. But as traders, especially when we are looking at shorter term trades, we don't care about the numbers on earnings, right? I do not care whatsoever if they make or miss target or whatever. All I really care about is the market reaction. Because sometimes, and we've certainly seen it before, sometimes on these earnings events, sometimes the earnings miss. And yet the market, because of guidance or whatever else is said, reacts positively to the announcement. Other times, like we saw on Netflix, they make targets, right? Everything matches up, they make it, but then the market's like, that was priced in, or I wanted it to be a bigger beat, or whatever the reason is, and they react negatively to the news. So we as traders don't necessarily care about the numbers. What we care about is the emotional reaction to the news event itself. And so that's what we're looking at here, is how does the market react emotionally to Apple and Amazon earnings this week. And then that, once again, I think will give us a better clue on, okay, are we going to start chopping in this range? And that's how weekly momentum gets at least a little bit of a reset. Or do we actually get a bit more of a stronger pullback in the market for it to reset that way? Now, on the weekly chart for AMD, once again, we've had several back to back divergent bars. Looks like all of these, except for this bullish divergent bar, almost all of them have followed through with their higher highs or lower lows. Currently, this week's making a bearish divergent bar. But you can even see here pretty clearly when I put my crossbar here, you can see how that's still basically right at price support. So I think if Apple and Amazon earnings way down, this will likely break price support and continue lower. On the weekly chart, right around $100 seems to be a really good target. So I know on the daily chart, 104, I think is what I said, was that 100 period simple, and then 100 was the next target. Well, on the weekly chart, certainly 100. So 100 is going to be the bigger level to try and play down into if we continue to break to the downside. And then, of course, if 100 holds, that might be a buyback in opportunity to play for a bounce up. Momentum's already been in the process of resetting. We still have a valid pullback signal here. So all of that would match up with the technicals trying to get a move down to $100. But like I said, may or may not. I think it will really depend on how those two big names do. Because if they can hold up, then AMD might just stay and chop. But if they can't, then I'd be looking for maybe a stronger pullback move off that one. And that might be, actually, I'm gonna start that one because that might be an interesting one to play. Once again, don't wanna take any action here, but I am gonna keep this on my short list because if we do end up moving lower, I think we could find a really great trade to play this down into the $100 price level, right? Something like maybe a broken wing butterfly or a standard butterfly even, to play back down into that range. But as of right now, currently, there's probably not much I would do from it from a daily chart perspective. And if I did, I would probably look at it as a quick scalp to play into the 100 on the daily chart at that 104.55 level. Up next is cat. So let me pull that one up. So on Caterpillar here, beautiful bullish sentiment, and the momentum is still room to move higher. Bullish signal here. Obviously, market reacted very positively to these earnings announcements. And I think we talked about this one yesterday in one of the sessions that I did. But this is a great example of, once again, a strong third deviation Bollinger Band snap. The sellers didn't drop it back down into the close. So once again, what's the probability here? Well, the probability is either we'll likely stay within this bar's range, or we could actually continue to the upside. And what happened? Well, we continued to the upside. We didn't have energy of a squeeze to kind of help us with that continuation, but we did have the room on momentum, which, to me really counts for something. If momentum's at exhaustion, then it's a bit harder to try and keep pressing higher. But if there's room on momentum to keep going and this kind of event occurs, then there's a good chance you could continue to get that stair step up, which we did today, right? We followed through with a higher high. Let's see, the high of today is 293.88. That third deviation Bollinger Band's 294.34. So unless this bounces back up into the close and can exceed this level, we're not making another third deviation Bollinger Band snap. So if you left a runner on personally, especially if it closes in a bearish divergent bar today, I would be starting to consider, locking in the remainder of the profits off this move. Not to say it can't keep going. Like I said, there's still room on momentum. This is still a valid bullish signal. But usually you want those like third deviation Bollinger Band snaps to last to really keep the trend move going like we saw here. And the one difference between this stair step higher after the third deviation move versus the one we're currently in is we had energy of a squeeze behind it on top of recent true lows. So both of those kind of helped it really continue that trend longer term to the upside. Here, like I mentioned, we don't have the energy off of the squeeze to kind of continue to help propel us to the upside necessarily. And we don't have a recent true low to kind of help with that trend move either. So if this closes in a bearish divergent bar today, I'd look at locking in some more profits if I was in something. If you're not in something, then I probably wouldn't touch this. Now, you might be saying, well, Allison, if you're looking to take profits, why wouldn't you, do a counter trend trade to play to the downside? And the reason why is just like we talked about with room on momentum, we could just stall here, right? So if you really wanted a counter trend trade and there's premium, you might go up here to like 300 and do a unbalanced butterfly, right? That might be a way to play it. But otherwise, I personally am not a fan of taking counter trend trades because it's going against the trend, right? So it means one, you're being a little bit more aggressive on the trade idea, and two, you really need usually the proper pullback, right? The stair step down for it to work out. Which is why I mentioned strategy wise, if you go with something, look for something to play a bit more off theta decay. Now, for this week's expiration, 300 is just too far away. You're not going to get any premium on an unbalanced butterfly here, unfortunately, to try and play that. Yeah, it's 5 cents. That doesn't make any sense, in my opinion. You could push it out an expiration into next week. That gives you a little bit more premium, but usually, personally, I'd want a bit bigger of a credit. And at the same time, the reason why I'm looking at 300 is that's a big psychological level. And if we do continue to stair step up because of the room on momentum, it gives you room to play into that level with the idea that it still holds. So I probably wouldn't take a counter trend trade on this one. I would just protect profits if I'm in something. And then if I'm not in something, watch to see how the price reacts, right? Keep it on your watch list, evaluate it. If it pulls back into the 10S support and it holds, then that might make the opportunity to jump into a trade idea then. So that's what I'm seeing for it currently. Let's move on now. After cat is SEDG. As soon as it loads up, guys. Sometimes a little slow. Ooh, big move down off earnings. Now, this one definitely had a bit more of that bearish trend going into the announcement. So I would completely understand if you're trying to play it lower. Still room on momentum to kind of continue to stair step down. This is still a valid bearish signal. The squeeze has started to fire right before the earnings. So arguably there might be a little bit energy left in this for at least the next few days to kind of keep it propelled lower. You did technically have a true low signal, but when Bollinger Bands are flaring open, you wait for them to flatten out to then play the move higher. And when you're stuck in a bearish trend like this, oftentimes those true low signals are more reversal signals up into resistance. And then if you break resistance, then you try and play for the bullish trend. But as you can see here, this has not been able to really break resistance whatsoever. So I wouldn't be putting a lot of weight on this indicator currently. That being said, we made a third deviation Bollinger Band snap. So as long as buyers don't really drag this back up into the close, which it currently doesn't look like it's going to be a possibility, this is another situation where there's a good chance that the price will either stay within this bar's range or will actually continue to stair step down. So if you were in a bearish play on SEDG through the earnings and you have multiple contracts, I'd say don't hesitate to take some profits, but maybe leave a runner on in case it keeps going, especially if it closes below that 200 psychological level. Um, and then, watch it for the next couple of days because once again, like here, for example, right, third deviation Bollinger Band snap, what happened? Ultimately continued lower for a few more days until it finally bounced and got the reversal it needed. So just like a third deviation Bollinger Band snap can happen on the upper Bollinger Bands, the same rules apply on the lower Bollinger Bands as well. And yeah, Trader Bill ICPG, we can take a look at that one. Absolutely. But for myself, when I see something that's already done this kind of move, unless you're looking at like more of an intraday trade to take off of it to try and, capture maybe from the open into the low here or something like that, it's not really a trade that I want to take anything on overnight. If I'm in something already prior to that move, it's a different story. But if I'm looking for a new trade idea, arguably you could do it because of the third deviation Bollinger Band snap and try and play that game, but you have to understand it's more a case of FOMO, right? You basically feared missing out on this move and now you're trying to catch up. And usually when you play the game of FOMO with the market, it doesn't usually benefit you, right? It's usually a case of the market's going to eat up that money that you're putting out there. Rock, absolutely. And Mike, I've talked a little bit about Tesla, but I will cover it again. We should have time. Let me talk about PG first. I am keeping a very close eye on Tesla, so we'll talk about that here in a second too. So let me put in PG, and then we'll probably end the session with Tesla, unless we have a bit more time. So PG here also already had earnings. Great gap from the close of the day prior to the bounce up. Nice run higher. The overall trend is still bullish. You have energy from the squeeze firing to the upside that can help keep us going. You have room on momentum to keep going. Bollinger Bands are flaring open. The only thing I am not a fan of right now, currently for this symbol, is notice where the price is at, right? The last few highs, including the high off of earnings, we've been stalling right around 158. And when you go over back here to late April, early May, notice that 158 right in that range was also where the price continued to stall before the stronger pullback. So that means that there's price resistance at this level. Now, could we break above it? Absolutely. But for myself, for a new trade idea, am I jumping in right at price resistance? There's no way. I actually have a sticky note on my display. You can hear me hitting it right now that says, beware price support and resistance. And the reason why I have that is as a reminder that personally, I do not want to jump in right at price resistance or right at price support. I either want confirmation that we're breaking price resistance, and then I'm all for trying to play the trend higher, or I want to pull back, see if support holds, and then if it holds, that gives me room to play into price resistance, if not for the bigger trend move. And the reason why I say that is because I've seen it one too many times, but especially this year, I feel like it's been happening a lot more this year, where all the other indicators, right, are setting up like here, right? Bollinger Bands are flaring open, bullish signal, we're on momentum, bullish signal down here, a squeeze firing, arguably a recent true low, right? All of that would normally say, Allison, jump into the trend move and play it to the upside. But I have seen one too many times where everything looks valid. The price is right at price resistance, and then price resistance wins over everything. And I'm basically buying a call at the high and having to sit through a pullback or sit through chop and some pain. Or sometimes, right, that's it on the move. And then I'm struggling to manage the call on a stronger pullback. So I would rather wait for confirmation that we're either actually breaking and holding above this 158 level, which then by all means keep playing the trend higher, or I want confirmation of a pullback, right? A better entry, if you will, back down at support levels. And then if it pulls back into support, it holds. Well, then I have an excellent target to play up into, if not for the follow through of a break itself. Now, if you're in something, once again, you might, leave a runner on the table to keep holding it. But I would also say, if you are debating about taking profits here or, some of your profits off the table, this isn't a bad spot to do it. A great example of this actually was on AI the other day. AI is one that I've been watching and trying to trade for a while here. For those of you who follow along with the $500 challenge, we are literally a week off in our expiration for that challenge trade having worked out, because I kept looking for this to go up and tag 45. 45 was a price level at the time that we put on this trade. And you can see yesterday, beautiful bounce up, Bollinger Bands opening up. All of this actually looked great to try and continue higher. But what happened? Well, the price resistance that we've kind of had in this range, it held, right? Especially with the market pulling back. And so what happened? The Bollinger Bands immediately flattened out and it dropped right back down. And when I looked at this yesterday, I even mentioned, I was like, man, I wouldn't mind jumping back into this, but I'm not doing it at this 45 level. I either need confirmation it's breaking or I need a pullback. And now today I finally get the pullback. So we'll see how this looks into the close. Might give it one more day into tomorrow to see if it holds. But if it holds, right, then absolutely I have room now to then play back into 45, if not higher. Whereas here, if I put on a long call yesterday at 45, I know I would not be happy about that today, right? I would be like, man, that was not the spot to do it. You knew better, Allison. Follow your trading plan, follow your rules. And that's, a really great example of why. So on PG, that's what I'd say. Just be mindful of this level that we're currently at. If you're in something, you can keep holding on or let a runner on or anything like that. But especially for a new trade entry, it's not a place with my trading plan and rules that I can jump in on. I either need confirmation that we're actually going to break, or I need the pullback for the better entry to jump in on. So let's go over to Tesla now. And then, Trader Bill, how do I measure confirmation? Well, in the case of breaking like price resistance, just a move and hold above 158, like on PG, for example. So if the price can break above 158 tomorrow, and when it maybe reverses back down to test 158, it doesn't break below it, right? It holds it as a support, then that's giving me confirmation that we're breaking price resistance and I can look to jump in, right? So that's kind of that confirmation we're looking for, if that's what you're referring to. So if you're ever at like a price resistance or price support and it starts to break the level, either one, it starts to break it strongly to where you can, jump in and keep going. But if it like barely breaks the level, what you want to see is on a little bit of a pullback, basically of a retest of that level. What you want is, does price resistance let's say like here, for example, on Tesla, we broke above this 313 level and then, but it barely breaks. So oftentimes when it barely breaks, the price will come back down and test 313. And if it does that and it doesn't break below that level, well, that price resistance has now turned into price support. And that gives you the range to trade it. Actually, a really great example on this, and then I'll come back and still do the Tesla analysis. But just, to drill in this point here, 200 was a really big price level for Tesla. And it usually, we'll see it here on the weekly chart, but for a while it was a very strong price support level. And so every time we usually went down, tested that range it held, it made for a good buy-in entry. So you can see it here, right? We came down, tested that level, held, came down, tested around that level, held, bounced up, came back down here, even, at the lows mid-year last year, tested that range, held, bounced up. And then right here, what happened? Well, we went down to 200 and then all of a sudden we started to break below it. And so, and at the time in the Profit Recycling Mastery, we were watching this and it was, I said, okay, if we go back up and test 200 and we can't break above it, that price support that had lasted for a few years is now price resistance. And if it holds that as price resistance, we short. And so what happened? Well, we went back up, tested it, couldn't break it. We shorted here, took the win, came back up, tested it again, held it as resistance, shorted there, and you had that nice run to the downside. And then even here more recently, we came back up and then we started chopping in that range, right? We kept trying to break 200, but it was very short-lived. The 30 in this case kept holding as resistance as well. So we could never get a strong break above it. You had little pullbacks that you could have played to the downside. And then right here going into the end of May, start of June, we finally had a stronger break above that level. And when it did do a little bit of a dip, you can see still held on that low above 200. And so that was a good confirmation that said, okay, this price resistance is now back to being price support again. Let's play it to the upside, right? And so that's kind of the idea there between price support, price resistance. Really quickly, for the trade that I currently have on in Tesla right now, which goes along with this, this whole talk today about price resistance, price support, we're actually right at price support and at a technical support level in the 4-hour chart, which I'll show you guys here in a second. But the price is right at this level here. Now it looks like it's starting to break it from a price support level. So not a fan of that. Bollinger Bands, of course, are starting to open lower. Momentum starting to cross below the 0 line. So all of this is starting to look weak, right? The 10s cross below the 30. So depending on how this looks, into the close today or maybe even earlier, I might look to cut this trade, right? Because at this point, I'm in a more bullish trade on Tesla. It's not working out. Is there time left on the trade? Absolutely. Is the weekly signal still valid? Yes. But my line in the sand from talking with y'all about this trade entry is I really didn't want it to break price support, right? Because if it's starting to break, that's breaking the technical viewpoint I had on this trade. Now, does that mean I can't re-engage in it later, especially because the weekly signal is still valid? No, absolutely I can. But I rather cut and protect capital here, and then if it pulls back and holds, a different support level, then re-engage at that lower level to play for the bounce up, because I have more room in that case to play for that follow through higher, if you will, and I have more confirmation it's attempting to hold. The reason why I haven't closed out of this trade just yet, though it does look like it's wanting to break, is on the 4-hour chart. So the 4-hour chart is specifically what I'm watching here, because the 4-hour chart shows where right around this price level that I'm looking to potentially hold is also the technical support of the 100-period simple, right? So you can see the 100-period simple's right there. So we're still holding that. Now we have some weakness down here I'm not a fan of. Attempting to build into a 4-hour squeeze. But in particular, notice the Bollinger Bands. Now this might change within the next bar or two, but as of right now, at least, the Bollinger Bands are coming up to meet the price. That means that currently they're not anticipating a break lower. Now, if the price continues to put pressure on this, if we start to break below the 100, likely the Bollinger Bands will start to flare open. And that's confirmation that says, okay, I need to cut my bullish trade, protect capital, and then we can reevaluate this later if it makes sense to jump back into an entry based off that weekly signal that we were originally tracking. Otherwise, of course, if it doesn't come back, we'll be very happy we protected our capital risk. If this level holds, though, then I don't really want to cut the trade idea here because that basically means I'm cutting it at the low of this pullback, and we could very likely bounce back up to where the trade still had a chance of working out. So because we have plenty of time on that trade, and technically the weekly signal's still valid, I don't want to necessarily cut it here, but if it starts to break this level, that's part of the reason I have this alert set up. If it really starts to break this level, then I'm out the trade. And if it makes sense, we can always look to re-engage in it. But that's kind of the line in the sand there is, can this hold or does it start to falter? So I hope that helps out. And then Angie's mentioning, this might sound silly, nothing silly, but I'm looking at Steve Madden. So let me pull that up on the daily. SHOO. And then downside targets, Evelyn, for Tesla. I'd have to go back and look at the charts, but I would say if we're breaking the 100 period simple on the 4-hour chart, watch to see where the next targets are on daily support would be, what I'd be looking at for targets. So, and then trader bill like 2 closes above. You could do a specific rule like 2 closes. I'm not as picky as like it needs exactly 2 closes above a price resistance or 2 closes below a price support to say that it's breaking. Um, I'm more than fine with just one. It all just depends on how the underlying price kind of reacts to that level. But if you want to set up a stricter structure like that, you absolutely can do that. I don't think there's any issue with it. Just whatever, makes sense for your trading plan and personality type. But I'm personally okay with it breaking and holding with one bar as long as the rest of the technicals match up with that thought process, right? Like for example, if I'm breaking and holding above price resistance, well, if I am looking to play to the upside, I still want room on momentum. I still would ideally like a bullish signal in the compound breakout tool, Bollinger Bands opening to the upside, right? Maybe a stacked up formation. So I still want all my indicators a bit more in agreement for taking that setup. So back over here to shoe, you definitely have some resistance around the ATR trailing stop as well as some price resistance here at 35 that could be struggling. But I know you're looking at this on a longer time frame. Of course, Trader Bill, not a problem. So let's pull up the weekly and monthly chart here. So the weekly chart I would have trouble with because we've been trending below the 100. Notice the Bollinger Bands are flat. I do love the squeeze. I like that we're trying to get a bullish signal here, but momentum's hugging the 0 line. And technically, the trend itself is actually a bit more bearish because the 10's below the 30, both are below the 100. Now that could change, right? We could start to roll up on the 10 to cross back above the 30. But anytime something has been trending below the 100 period simple like this, like we have been, right, in a bearish trend, you need to be very mindful when the price goes back up to test it. Usually you want a bit stronger of a break, and when you can get that, then you look for the follow through. Otherwise, usually a retest of the 100, if it can't break above it, is actually a place where shorts pile back in to drive the price back down. And a great example of that is actually earlier this year. We didn't even quite test the 100, but we kept getting close to it stalling. Notice that the Bollinger Bands here were flat as well. So what happened? Well, we consolidated and then ultimately we dropped back down into price support. And overall, this has just been chopping this entire year from a weekly perspective, with the lows being at 30 and the top end of the range being arguably $37, $38. So the bullish diversion part might help you tag that level, but I wouldn't be a fan based off the weekly chart of trying to play it bullish with the fact that we're still trading below the 100. Let me pull up the monthly. really quickly. That's good to know. Ricardo mentions the Qs finally reached the 21 EMA on the daily, so might be finally trying to find some support in the market if that's the case, at least for today. On the monthly chart, now the monthly, get the point of view of maybe going long, right? We've had some monthly true lows recently. Great squeeze, tempting a bullish signal here. Now momentum's still bearish, so I'm not a fan of that. Still below the zero line with red bars. And the moving averages are still in consolidation, but I do really like that it's holding the 100. So I would say personally, if I was really wanting to play shoe, I would probably buy shares or go out and do like a leap, really give myself plenty of time because this is really based off a monthly perspective here. If it breaks below the 100 period simple, which is currently at 31.35, arguably you might give it to 30 just because that's where price support has been this year. So if it breaks below 30, I'd be out of the trade, right? I'd cut it. I'm not wanting to play it all the way down into 25 to try and hold it. I would cut it here. And then if it goes down to 25 and holds like it did back here, then use that as a, buy back in opportunity. But otherwise, buy some shares so that way you can sit through plenty of chop and then see if the 100 can hold. Because if the 100 can hold, then yeah, this could start to make for, a bit more of a bullish play back to the upside. Otherwise, if you want to wait for a bit more confirmation, wait for us to break above the 30 period simple on the monthly. Notice how that's in line with the 100 period simple on the weekly, right? So you have, and of course, it's right at price resistance. So really wait for confirmation we're breaking and holding above this level. And then if we are, then you could look to play it towards 45, which I think is a good target. That's another price resistance level, if not 50 itself. But this chart still has a lot of consolidating signs, like with the Bollinger Bands, with the moving averages, the squeeze building up energy. So I would definitely say if you're really wanting to be bullish, give yourself time. And if you want to try and time it a bit better, yeah, you might lose out on some profit potential, but wait for confirmation of breaking resistance. Otherwise, you might be stuck in chop. And if you do shares and you do at least 100 shares, then you have the opportunity during the chop to do things like covered calls, right? To take advantage of option premium in the short term for income while you wait for the shares to play the bigger move to the upside. Otherwise, if you're looking for like a more options trade like in the next month or two, I probably wouldn't touch Steve Madden myself. And that is my time, guys. So thank you so much for joining me. As always, may the trade be with you, my fellow Jedis. I enjoyed our session today. And for those of you in the small account mentorship, I'll be back on for the last hour of market. Otherwise, I'll talk to you guys again next time. Bye, y'all.